Welcome to the Knakal News Network. The Knakal News Network is brought to you by the Knakal Group, Cushman & Wakefield's #1 investment sales team.
Hi, I'm Jon Hageman, Executive Managing Director at Cushman & Wakefield. Welcome to the Knakal News Network. Today I'm here with Bob Knakal, Chairman of New York Investment Sales, and today we're going to talk about the year-end 2017 investment sales numbers. Bob, we're just at the start of January. The numbers are in for 2017. Tell us a little bit about what we saw.
Hags, it was a very challenging year in the investment sales market. It wasn't that the year was unexpected because we expected the slide in volume to continue, but not only did we have that slide in volume, but we also had value start to retreat, which was also something that was not unexpected based upon where we are in the cycle.
Bob, you mentioned that this was somewhat expected. Where do you think we are in the cycle right now?
Well, I think we're about 28 months into a correction. You know, as we've said for a long time now, 2014 and 2015 were the two best years I'd ever seen in brokering for 34 years here in the city. In 14, we had more buildings sold than ever before in the history of New York City. 5,532 buildings traded hands. That was an all-time record by more than 10%. And in 2015, we had $80.4 billion in sales volume, which was also an all-time record. But as you know, towards the end of 15, beginning of the fourth quarter, we started to see some cracks in the market. The land market started to fall off the table. That's usually a sign the market is changing. And indeed, we think that October of 2015 is when this correcting market cycle began. And now we are 28 months into that correcting cycle, and it has played out as a quintessential correction happens where volume will fall first and then values will fall later in that correction.
Bob, expand upon that. Why is it that volume falls first?
Well, volume falls first because when real values fall, sellers simply don't accept the offers that are on the table. So what you have is a small slice of the market continues to get executed at the old pricing because the buyers are just not in tune with what's really happened with the marketplace. Those sellers actually accept those offers and sell, but a majority of the folks who are trying to get the old price don't capitulate at the new price level. So you always have volume fall before values start to fall.
So Bob, with that being said, what did the volume numbers look like last year?
Last year, the number of buildings sold was off very significantly from where we'd been in the past. Last year in New York City, there was 3,604 properties sold. That was down about 18% from the total that we had in 2016. And if we go back to the peak of the market in 2014, we're down about 35% from where we were at that peak. So these numbers are off very, very significantly.
Now that's number of properties sold. What about the volume, total dollar volume of all the sales?
Dollar volume was just a shade under $35 billion. That was down 40% from 2016 and down 57% from the $80.4 billion that we had in 2015. So the dollar volume was off to a greater extent than we saw the reduction in the number of properties sold.
One of the things you always talk about is how Manhattan is a leading indicator for the rest of the market. So let's break those numbers down now. How did Manhattan perform relative to the outer boroughs on these volume metrics for sales and total dollars?
Well, Hags, that's a great point because I do always say Manhattan's the lead indicator. Whatever's going to happen in New York City happens in Manhattan first. So Hags, if we look at what happened in the outer boroughs relative to Manhattan, we see that in the entire market, the number of buildings sold was down 35%. In the outer boroughs, the volume was down 34% from 2016, but in Manhattan, the number was off by 45%. So number of properties sold was much more negatively impacted in the Manhattan submarket than happened in the outer borough.
That's number of properties sold. What about dollar volume?
Dollar volume the disparity was even more significant. Dollar volume was down 57% overall. In Manhattan, the dollar volume was off by 66%, and in the outer boroughs, dollar volume was only off by 27%. So we can see that things are playing out just as we would expect, that Manhattan is really taking it on the chin relative to the outer boroughs, but that's something that's fully expected.
So Bob, these are all the volume metrics that we always talk about, but what about value specifically?
Yeah, value, if you look at the entire market, the numbers don't look so bad. In fact, citywide value last year was up about 2% to an all-time record of about $544 per square foot. So the value metric looks good if you look at the entire market. However, when you dig a little deeper and look more closely at those numbers, you see some troubling factors. In fact, in the Manhattan market, the value of property sold on a price per square foot basis was down about 4%, down to about $1,386 per square foot. That was a very troubling statistic. If we look at the outer boroughs, we see in the outer boroughs, the average price per square foot is up to $406 a foot. That's the first time the average has eclipsed $400, and that's a 7% increase from what we had in 2016. Now, going back and looking at the Manhattan numbers, the troubling thing about them is that there are 6 major property types that we look at in Manhattan, and they aggregate to a negative 4% total. But some of the reductions in value were a little more severe than that.
So you say in an ordinary year, that's what you expect to happen. Is that what you see for 2018?
Well, I think there's an externality that is going to impact the market very significantly, and that is tax reform. I think that it's very likely that in the absence of tax reform, we would have seen further reductions in volume and further reductions in value. But I think those metrics could change a little bit, but tax reform is going to have a profound impact on how the market reacts. And I think we're running out of time for today's episode, so I think what we'll do is take a look at that more closely next week and talk about how tax reform really can have a very tangible impact on the direction of the market moving forward. In summary, 2017 produced negative movements in both volume and value in New York's investment sales market. The number of properties sold citywide was down 35%, while the dollar volume of sales was down 50%. Both of those metrics are off peak years of 2014 and 2015, respectively. Tax reform will impact the direction of the market moving forward, but we will discuss that further in next week's episode.
Thank you for joining us today. Tune in next week for another episode of the Knakal News Network.